2, 1. Event has occurred.
Sweep PS sellers at 6686. Yes. Sell. Size 440.0. Sweep PS sellers at 24,798.5.
LVN.
Sweep PS sellers at 6680.
LVN. LVN. LVN.
Sweep PS sellers at 6,674.75. ICE for PS by ICE 500. Sweep PS buyers at 6678.
LVN.
ICE for PS by ICE 500.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. This stream's about integrating Bookmap OrderFlow tools with auction market theory using a volume profiles, a chassis, and the intraday developing time frame. It's based on structured trades that are available to everyone in the Trader Lab community, and there's no cost for that. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get into something interesting, we always discuss it. This is based on structured trades that are available to all of you, and you can access that in the Bookmap Discord Trader Lab. There's a link in the bottom of YouTube if you want to take advantage of that. And again, there's no cost. This is about the business of trading. Now, we have a pretty interesting day going here today. The market has been taken by surprise by a tweet on Truth Social by President Trump that he is going to be putting additional tariffs on Chinese goods. This is kind of like throwing, you might say, a wrench into the proverbial market machine. So the market is done beyond Acapulco cliff dive. S&P's down over 100 points due to this, and it is a major disruptor and a change. So that situation is disruptive to the auction, and then the market has to reprice. So one of the things about understanding trading is that anything can happen at any time. So you always must use prudent risk management, and if you and that should be part of everybody's plan. You have to use stops. Those of you who don't use stops will find that these kind of outlier events can take you out of the business and do worse. This is really where that risk disclosure is all about, because even if you're using stops, they don't limit your loss. It really depends. So you can get skidded. And if you're in a thin market, you have more risk, like NQ, than any other thinly traded market. There's less liquidity, which means you got to take a number, wait in the queue until they can take your, trade the other side of your order. And that could be quite a bit further than where your stop is. So those of you who, whether you use a stop or use no stops, I always say use a stop, also be adequately capitalized, because as they do say, things do go bump in the night. Now, a couple of things I want to remind you that if you're interested in what you see here in Trader Lab, there are 60 PDFs of structured trades you can download. Some of these are actual trades. Some are screenshots. These are actual trades. And it's not plug and play. But these are available. You can use the link in the bottom of YouTube. And also, please forward these streams to your buddies. Just copy the link and send it over to them. They might find it interesting. And you can always access this in Trader Lab, as well as a library of webinars and the Trader Lab community. Also, currently there is a contest going on for you guys who are inclined, if you'd like to have the opportunity to get 3 months of Global Plus with data for free. And that's over a $600 value. And it's for the month of October. All you have to do is submit screenshots that are annotated with your trades. And it can be in sim, it could be whatever, with an explanation. Just share your charts highlighting order flow concepts, executed trade, and some text overlays that show levels and what you did. And then use the hashtag FreeBlueJacket and share it on LinkedIn, Instagram, or X. And this is what the blue jacket looks like. Very cool. And I think the other part of it is the Global Plus. Like, come on, let's go. And there's let me find the other part of this. So you could get some ideas, okay? So do that. And you should be doing this. If you're in TraderLab, this is what you should be doing every day when you review your trades. Screenshots, building a book of trades, and developing competence. So you're already doing it if you're in TraderLab. So guys, you're in TraderLab. And by the way, look at the back of this blue jacket. It's very cool. So very nice. So let's do it. Now, I want to talk about the market pre-report pre-Trump tweet disruptor, which changes everything. So you understand the auction takes what it knows, and the idea of the auction is to figure out what's too high, what's too low, and what's fair. And this was the consolidation we were operating in from this date. So this is like a swing low, and this is yesterday's high. Now, what you'll notice is the market, so this here, there's stops under here, there's stops under here, there's stops above there, there's stops above there. So take the stops out, go down, take the stops out. Get too low, come back around, squeeze, take the stops out. Okay? Yesterday, up, take the stops out. So this is what we were doing. Now, based on this behavior for today, the plan initially, and this is before news, was to take out this high. Why? Market goes up to go down. And yesterday was shorts. If you remember, if you follow the stream, we sold. This is just luck of the draw, just following a trade plan, pretty much near the high of the day, right up in here. And the idea was to come down, take the stops out here, then here, and then potentially out here. And the point of it is that it's not saying what it'll do. We can't predict. What we can do is understand market mechanics. This is the retail price from this day. And the idea would be to check this, and if it's too low, to come back. But yesterday we got the stops, which was the primary target, and then we came back in. Coming back in sets up, if the shorts are in here, to squeeze them and take out the high. So that was what the deal was coming in. And now here's what this looked like. And this, I'm trying to remember where okay, this is today. Pre-news, all right? So the idea of today was, now this is yesterday. Let's look at this. Coming up day before yesterday, remember we were short here going for this. We got to 64, which was a support. Now I'm showing you how all these things build together. And our buyers came in here. And then it was longs. And in the stream, I showed you guys the shorts. And then when it blew through all this, then the longs were up here for continuation trade. So that was that. Then yesterday it was open, short from here. And then the low volume area, watch the logic, was in here because we ran in here. Well, if you run, what's here? Not auction. It was, I'm out of here. So if we get this yesterday and we get the low volume area here, then we're looking for the stops under here. And there you are. And maybe lower or not, no way to know. Now what? Low volume zone is there. So for today, it was get long and do the opposite. And get the stops above yesterday's high. That was today's plan. Now, that plan went out the window. But not because the plan wasn't good. It's because there was a change. And this is what this thing looks like just a few minutes before. And currently we're trading at 66.62. Is that right? Yeah. We're down here, guys. So this is how fast this thing is running. So I'm going to show you the longs, I guess. Seems like it's so long ago. And then show you shorts. Now, I want to stress, if you don't have a plan that accommodates high volatility, you don't have a trade. Your job is not to respond to FOMO, which is what most of us do. It's our nature. Oh, I don't want to miss out. But that's what'll take you and wreck you and take you out of the business. You have to have a plan. And in your plan, you have to know what you will do. If this is a surprise to you, let's say it is, what you do should not be a surprise. What you do is based on your plan. When you have a news report or something, an outlier event, then either you don't trade or you have to wait for when it fits your risk parameters. And then if you don't have a plan developed for this, you don't have a trade. You sit back and you go, isn't this interesting? I'm going to screenshot it and research it. You do not have to trade. When you find yourself overtaken by emotions and, oh my goodness, look at these, I can make so much. That's the lunatic. That's high. That's FOMO. Okay. You need to recognize FOMO and you have to disrupt FOMO. This is what will destroy a retail trader. I'm going to tell you right now, professional trader would not get involved in this until their structure and they have adjusted their risk parameters to the volatility, or it doesn't fit, it's not qualified, and you're a tourist. You're no longer in your market that where you have an edge. You're in another environment where you don't have an edge. And I can't answer that for you. I will tell you just for me, when I get surprised, I have to go, what's going on? I'm trying to find news. I'm going, what is this? This is a news event. What is the news? Why? And until I can clarify, I'm just going to wait. I have all day. If you chase this market and you were gripped by FOMO, this is what will take you out of the business. Everything else you can work on. But if you responded to this, you have work to do. If you did not respond to it and you controlled yourself, congratulations. This is what makes sustainable trading. This is what keeps you in the business. What takes you out of business is what most retail traders do, and that is trying to trade a market they have no plan for. I hope that makes sense. And if you didn't handle yourself, come to Trader Lab. You got to learn about yourself. The biggest obstacle in trading, my friends, is not the market, it's you. Let's go back to the RTH Open. I'm going to show you the RTH Open, and then when this thing changes, I'm going to try to show you some shorts. We've had some shorts in here about high volatility. Remember, if you don't have a plan for this, you absolutely have to have a plan for reports. And I treat this like a report. And if a report, remember how the market works. The market is an auction. It goes up, it's down, it's trying to figure out what's too high, what's too low, what's fair. When an external event comes in, and I'm talking a report, it could be FOMC, it could be PMI, it could be somebody trips over a cord at the CME, it could be a tweet, right? External events. When an external input comes in, whether anticipated or not, and this is not anticipated, it is a shock. And if it's something as major as this tweet about increasing tariffs, it is a disruptor beyond measure to the global economy. It is not a small matter. It is an outlier. It's no different when I was trading the crash of 87 or Desert Storm or 911. I was trading during those events. It's like, what happened? Everything changes. So everything goes out the window. What cannot go out the window is your discipline. So I'm going to show you the first trades. And these are Trader Lab structured trades. What happens after the tweet, it's where's the bunker? And I'll make a phone call as soon as phone service comes back. So this is RTH Open. Let's look at this. We have, I got to get this back here for you. The overnight volume point of control, the retail price from the ETH. This is where the fair price is. We have yesterday's naked volume point of control, or the retail price from yesterday, and settlement ETH low. But what do I know? The market is short. So if I know the market is short, I want to get long. That's the plan. And until it's broke, it ain't, as they say. So the high probability target, and I also got to show you something else. Yesterday's value area high. So what is the language of the market at this time? Value areas where 70% of the volume took place, and I'm opening higher in range. Yesterday's high is above us, and outside of value. That means we're out of balance. That suggests, so far, that we can go north of the border, and the first probability is the ETH high. And you guys follow the stream, you know that's about a 98% probability to take out ETH high low. So everything at the moment says get long. Now let's look. I have approximately an 82% probability of getting here. Now these are statistics. And the value area high, let me give you one more. There's an 89% probability I check either the previous value area high or low, and considering and 72% to check this. So I have 82% to go there, 72% to go there. I'm clueless and I know nothing except the market is what? Short from yesterday. That sets up the longs. Everybody with me so far, notwithstanding what's happening currently, which is not related to what I'm talking about right now. I'm showing you structured trading. I'm not showing you a crystal ball. That part, don't have. Are you guys with me? How we doing in YouTube? Hope you're getting some out of this. Please hit the like. And I'm suspecting you want to see what happened before this changed. Or I can also just skip all this and we can go to what's happening now. I think I'll give you the trades because this is really about structured trading, understanding market mechanics, and then not predicting anything. This is the first long. Now, this is a hard trade. I'm going to show it to you, but here's what's important. Location, location. This is like real estate. I'm opening higher inside of range, 82% probability to come here. I'm outside of value. This is my area. Now, let's look at the trade. This is very nuanced, very fast, and I'm going to say very difficult. This is for experienced traders only who've been in the Trader Lab and have developed unconscious consciousness because there's no time and there's very little structure. But the urgency of this is 1 minute, okay? So to be able to get long here takes really significant skill and, like every trade we put on, the willingness to take a stop to go for the ETH high, 98% probability. So my first trade's here. Let me show it to you. And these are not recommendations. You have to know where you will trade before it shows up. So if I know I'm opening here and I have shorts, let's come back to what let me make sure I got the right thing here. Let's come back to what we know. This is before the news. This is the long, and it was right at this is the value area high. This is the open. So the dip, open, dip, value area high. Could also go there, so nobody knows. And remember, the low volume zone. So this sets it up for me. I'm aiming for ETH high, and this is my target. Same as the target from yesterday's shorts to take out the stops under these longs. Now it's get them out, and now it's flip it to the other side and get the shorts out. Is that making sense? This is the plan. Now, you go from there. Now let's look at the longs. I just want to make sure you understand the logic. So this becomes opening swing low. And here's another thing. We're opening in a fair area. So I anticipate two-sided trades. So RTH open. I have a sweep. Let's look now at the language of the market. Resting liquidity. This is order flow now. Buy sweep suggests counter rotation. Micro structure. Where's my retail price? See this right here? The overnight volume point of control. I'm just going to put a line here. Is there. If this is too low, I can look at it as support. Now, this is very nuanced. Resistance, sweep, going to zero. Remember my locations. Here, high probability target, 82%-ish, and possibly this. So I've got two areas. I got this, I got the overnight mid, I got this. But this is my last auction, the ETH, and the market is short. So I'm giving you the rationale. This suggests the down rotation, teeth chattering, don't know, clueless, sweep. I'm then looking for a counter rotation, and it doesn't have to do anything. Now, this is called VPOC migration. I made these up. This is very nuanced, and I'm going to say advanced. What's advanced about this is the speed. And you cannot be mechanical. I'm sorry. Wouldn't it be nice? So what I do, I don't use indicators. I'm reading the behavior. So here's what I read. Buyers are here. This is before the RTH open. And I got less buyers. This is now delta divergence, sweeps, resting liquidity. All this is telling me potentially lower. Now I have my delta. Watch this. Sellers are here. There's more sellers than there is buyers at the high. So I had my divergence from my buyers. Too high. Liquidity, sweep. This is how order flow can help. Now I got my sellers. I got less sellers, lower price. I'm getting divergence coming from the other direction. I got a little nibbling on the buy side. I got more sellers. Now right here, I'm looking for it to do what? Go lower. I got more sellers. What does it do? It doesn't go lower. It checks support. No clue. Less sellers. So I have more sellers. Why isn't it going down? Absorption. Now I'm only in here 23 seconds, guys. This is why this is not a place anybody ought to trade. Less sellers. VPOC migration. This is the new retail price. What the language says. Too high. Too high. What's this? Too high. What's this? If I bounce that way, I'm going lower. If I bounce this way, I now have resistance. Watch. This is very advanced, guys. This is not mechanical. This is where, and to do this trade, you have to already be able to do other more structured trades that you would learn. Mean reversion, number one, because that's where most of your trades, counter rotations, are going to give you the opportunity for continuation trades. This is not good for developing traders. It's going to be FOMO for you because you don't want to miss it. You're in this heightened state. Not a good place unless you already have your stuff together. Support, resistance, sweep. What happens here? Sweep. So when I see the sweep, I'm looking for longs. Now I don't know where I get this sweep. What is this? I had a sweep here. I went down. What do I get here? A sweep, resistance, and I'm looking for it to go down. Where's my support? Here. Resistance, support, going to zero, Lewis. Support, value area high, support, resistance, break high. Now I'm above there, and I'm now what was resistance can become support. Watch now. This is a bit advanced, guys, so if this isn't your thing, don't worry about it. This is a liquidity trigger. I'm really going into some other place. It's like we're in another dimension of trade. And this is not a trade anybody ought to take. This is resistance, right? Right here, I trade into it. There's the icebergs, passive. That's what these guys are. Now, right here, it can do this, but if I break above it, and now I have a sweep, and let's look. If I get the sweep, I can do this. If I get the sweep, I can do that. If I break above this, and it's support, and I get the sweep, I can do that. Watch. Now, I get VPOC migration. Let's look at the language. This is language, okay, guys? I don't use indicators, so I speak market. That is resistance. I break above it, and I get my sweep. That suggests coming back here. Now I get VPOC migration. What's the language say? Too low, too low, too low, or support, support, new retail price. And don't forget, we had a target of the overnight high, right? Which is there. So if you got long here, this is an obstacle. Opening swing low. By the way, I gotta put this in here. It's very important. Today was, support. Here, this is an order flow trigger advanced concept. I can't give you everything, and you don't need everything. What you need is to understand market mechanics. You can learn this in the Trader Lab. What is this? Resistance. You know the concept. Resistance becomes support. Let's look a little further. Sweep. VPOC migration. New retail price. Where's my support? And here's the key. Liquidity comes back in. Liquidity, resistance becomes support. Outside, long, so you could be getting long here or there, but this comes in. This blocks. So right here is a long, and now you're going to go for the next piece of liquidity, or you're going to scale at the micro high volume here. All that's up to you. I'm just saying. Now, for me, I'm going for yesterday's high. Very, very, very comfortable with my trade. Doesn't mean anything. Just because I'm comfortable, I'm just following a plan. Now, let's do this again. Liquidity. Liquidity comes in here, liquidity here. Push, push, push. Let's mark this together. I hope you see something. What I'm trying to share here is process. All I can do as a trader is follow the market and try to interpret using the tools I have. So let's come back. Let's go back here. What do we know? This is resistance. This becomes support. Watch. What do I know about this? This is resistance. It becomes support. Sweep. Now, when I get a sweep, let's come back to the concept. If I get a sweep, I'm looking for counter rotation. There it is. But I have support. If I get a sweep, I'm looking for counter rotation, and I have support. Watch. Just showing you some ideas. This is Trader Lab. Now, I'm not saying it's any good. Who knows? They're only good until they're not good, So my target on the longs is this, okay? All-time high. Why? Buy stops. So as far as I know, sweep, support. It's very important you watch this. Look, you need to screenshot the following. You want to learn? It's called Let's Learn to Earn. Screenshot this behavior if you're in Trader Lab. Support. Screenshot this behavior. Support. Here's the other piece. Behavior, sweep. What do I anticipate? Counter rotation. What did I anticipate? Counter rotation. Support. What do I anticipate? Counter rotation. No counter rotation. Support. Watch. VPOC migration. Looking good, Lewis. Feels good. That's from, what is it, Trading Places? You ever watch Trading Places? We were so excited about that movie. It was actually filmed in, the floor was the juice, orange juice. in New York. And that's where they actually used, they filmed it on the floor. So if you guys haven't watched Trading Places, you're missing a good movie. Dan Aykroyd. Anyway, this is the new retail price. So as far as I know, since I know I don't know, I'm going, north. So far so good. Let's watch. And remember where support is. Let's keep an eye out. New retail price. So here's now don't forget at 9 a.m. we have the Michigan major report. So that's a big deal. So if we understand there's a report, a couple things you might consider is profit taking in front of the report, or you just get out of Dodge and you just get back in the Barca Lounger until after the report. It doesn't matter. Your plan has to have something in it for reports. Do you trade reports? Do you trade into reports? Or do you just flatten out and have the confidence that another trades are going to show up eventually, no matter what the report is? See, the thing about a trade plan is you got to know what you're going to do before, not if. It's not like, what should I do? If you don't, anytime you have to ask, what should I do? That means you're gambling because you don't have a vetted plan. Every element must be vetted. And when you get an outlier like we had with the tweet and the China thingy, and now the market's done the Acapulco cliff dive, it's down over 1,000 points in the Dow, we're down 100 points in the ES. What do you do about that? Do you know? Now, you can't predict it. So if you accept you're in an environment that's 100% random, and I always say this 100% of the time, you have to have all these scenarios worked out. So when it happens and your jaw is on the desk, you have control because your emotions, your fear, your greed, your FOMO is all going to be triggered. You're going to be out of your mind with chemicals that are going to flood your brain. And you need to understand this and anticipate it. Otherwise, you're now sitting with the gamblers, and these are the days that will ruin you. Not only take you out of the business, but if you're actually trading futures, you have unlimited risk. And I have observed in my career, which is going on, it's going to be 47 years now, good traders who lost it and lost more than their account. They went debit, and we're talking homes, marriages, everything. I'm not saying that to frighten you. I'm saying it to remind you that risk disclosure is there for a reason. And if you don't understand the environment you're in, or you think this is a video game, you are deluding yourself. You must always be prepared for the things you know you don't know. And that's part of your plan. So let's look at this. Let's come back to the concept. Now, before we get this reversal, I have to remind you. So we come up here, right? I get my sweep. This is my next layer of resistance. I get above it. So now this is going to be support. And I'm looking for it to continue to there. Okay. Break low. And we have to compare this one, to the other ones. Break low. So here's what I have. The sweep, the obstacle, the next scale, if you use liquidity, I do. And I'm just going, this is my target because there's going to be fuel up there. Break low, has to clear this. There's my sweep. Now, you're going to have to compare this. Here, we're going to go back and look at the ones from before. I get above it. So now I'm okay. Everything's looking good. Deep breath. Break low. See the selling? Change. This now is resistance. And there's change. Now, here's what's important. Not what happens here. So far, not a problem. Just disconcerting. Come back to where it was, we had it before. Support. Resistance. Come outside. This becomes support. Liquidity is pushing. Skew. Support. This is mean reversion, by the way. These are longs if it's in your plan. This would be a bit tricky because of this. So you might not take this one if it got under here, but you're leaning on this. So I just want to show you these are called these are reversion trades. They're longs if they're qualified in your plan. Not saying they are. I'm just showing you structure. Okay. This is your next resistance. So far, so good. Right here is what's happening. And you got it. So anyway, this is where things change. Now, there's another long that comes in here, but I want to show you this is what's so important about this. Let's come over here. And let's come over here. See this? Change. Support. Stacking. Support. Support. Resistance. Break above it. Become support. Sweep. No downy. Going up. VPOC migration. Everything's north of the border. Support. Stacking liquidity. Outside in. New retail price too low. Support. 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 Outside. Support. Longs. 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 Resistance. Break. Become support or resistance. Clueless. Break high. Next target. Here. High probability. We take out yesterday's high or low. So for me, it was long. Okay. Break under here. Trouble. Now, right here. Trade management opportunity or nothing. And don't forget, we got the report at 9 a.m. So, and then this. Like, what the heck? Now, let's look. Where's our opening swing low? I want to show you a trade. So we know the following. We know, now right here, no clue. Never have a clue. But this sweep and this says either that or we break through, hold, and go. This here is where the teeth will chatter, and this here is where you're either out, up to you, trade management, or you're trailing further behind and you're out at some place. Up to you. If you're somebody who gets in the Barca Lounger, then we have the opening swing low, and we can come all the way down, and the longs in this leg can get thrown under the bus. But what else do we know? Value area high, overnight volume point of control, too low. If I come outside and pick, I know that this is my area. Too high. What about this, Tom? So coming down. So right here, coming down. Sweep. This sets up a long right here. Now, so far, for me, the longs are still okay. You know, kind of like, what's happening? I pick the opening swing low. It's like one tick or two tick the thing. And notice what happens here. I get my sweeps coming. Let's look at the delta. Going to zero, Lewis. Selling, less selling, lower price, less selling. This is the delta. What that is telling me is even though price is going lower and I have my sellers and the sell stops are coming out, see the sell stops, that the delta, the sellers, which are the market orders, so new trade, new shorts, and these are market orders, the stops, that the buyers are consuming the sellers. So the price is going down. I'm getting the sell sweeps. I like to see sweeps at extremes. Now, what I like to see and what happens, and this is after the Michigan pre. So less. That's delta divergence. What happens here? Where am I? Location. Look at the buyers. See the change? So right here, I get my buyers. Now, where can I get long? Where were my sellers? They were here. So right here is a trigger. I hope you're getting something out of this. I'm staying here because until the news, this was just the way it was. So what I know is sweep, stops. Look at the buyers. Change in the delta. So less. Whammo. Buyers. Pull back. The sellers were here. This is a trigger. Pull back. Here. It's also a VHVN. I can use this right here. I can buy it. To there. Sweep. So this is what I got now. If I get long here, I want to scale there. My next area is to get through the VWAP in the mid, and that's my resistance up here. So everything so far is long in this plan under the current conditions. And of course, that's all going to change, but that's neat. We don't know that, right? Next scale, sweep. So now we want to watch this, our variable high volume node, and the sweep. Watch. So everything is wonderful, having a great time. Resistance, sweep, break low. Now I have resistance. So what I have here is resistance, sweep, counter rotation. Here's the possibilities. If I come outside, I could be looking at longs for mean reversion. So far. And resistance is now here. And as far as I know, going up. This liquidity comes in. I see this. Where's my location? It's here. Let's see if we get any reaction. Sweep up, resist. So to there, structured trade, and then we're looking to come out the high. Okay, that's the plan. If I counter rotate, which is related to that, and I come back here, I'm in two-sided trade. So I know I'm in two-sided trade, so I'm only taking longs. Where's my location? It's here. This is a long. I got the slug over here. That's like pressure. I'm leaning against this, and right there, VHVN. This is a long to there, to where? To there, and then north. And then this, I believe, is the news, right? And then hasta la vista, Tom. Thanks for playing. You get a coupon to the buffet. Everybody with me so far? How you guys doing? Please give a like if you're visiting in YouTube. By the way, this is structured trading. Now, the news completely changes everything. And there's no way to know. No way to know. So once, and this is news, once this happened, my jaw's on the floor with everybody else. It's like, what happened? And then this. So there's nothing. So you'd be stopped, and if you get skidded, you're skidded. Life in the fast lane. I always say, get risk neutral. So let's assume, remember, I just say, for me, this is a structured trade. Isn't that a beautiful thing? Liquidity, location. It's got it all. It's really nice. And then we have to go back to where it was too high. See this? So resistance. So can you see if you were trading this plan today, it'd be, long, resistance, long, resistance, and then you're trying to, going for the target. Yesterday's higher low has a 82% probability, and based on the structure, it was going to be yesterday's high, but this changes it. Okay, so once this happens, then there's no longs, and it's what? Now let me see if I can find where the shorts started, because when this happens for me, I don't trade. I go, I can't manage risk. I don't know what's going on. I couldn't even figure out what was going on. I was like, I don't even know. What's this? So you see, we're violating all the levels. And the volatility gets super high. So I can't trade this because I can't manage risk. But I can start looking for behavior. So I have to wait. I don't think I had anything until I got to look for it, because I did post something in here, but I can't remember where it was. Yeah, here. Yeah, this is a short. Let me show it to you. Now, when you get a running market, and this again is trade plan and experiential. In other words, you don't have any experience. Your job is to be here tomorrow, not to respond to FOMO and blow yourself up. As I mentioned to you, over the years, I've seen what I consider decent traders lose control and go from being in the business to being bankrupt. I'm not saying that to, quote, scare you. I'm just sharing facts. And it's a sad thing because it was preventable. But you have to know yourself, and you also have to know that this is just not a walk in the park. Something has changed and disrupted the perception of value. The market is now, everybody's freaking out. So how do you manage risk? It's like chaos. It's like somebody yelling fire in the movie theater. Everybody's running for the exit. You can get trampled in this, okay? Outsized risk. So the way to operate is to let some structure come in. Let's look at the structure. Well, we know it's the Acapulco cliff dive, but how do we trade something like this? Well, let's look at structure now. This is an outside edge. There's a sweep. So this is an outside edge. This is a low volume node. Break away from it. There's a sweep. I'm looking for counter rotation. Now, for me, I can only do a trade that's called mean reversion. Reversion trading is you have to get the counter rotation. So I'm going to use sweeps. Here, let me show you another sweep. Where was resistance? Let's come back to something I've been showing you. Now, this is not a trade that anybody should take unless you're very savvy. And this is very fast. So for me, what I do with this stuff is once I start seeing structure, I want to see if this is holding, is it behaving? So when I break here, you see the sweep. I'm doing the same things I've always been doing, except they're different locations. And I also am going to refer now to the auction. I took out the ETH low, and I have a change. I'm under 67.70. I don't know if I should spend too much time on here. So I'm under 70.68. This was my high volume. So what this is like too low, too high. So this is yesterday, took stops out here. That's why I was looking for it to come here. When all this gets disrupted, now it's what's below us. Well, you got 67.09 and you got a lot more below. So 67.35. Remember the targets, not that this matters, but the targets from here where I was looking at this, and 35. Now all that's out the window, okay? So we can't even use that now. Break. So this is what this looks like. Let's come back to this event. This hasn't happened yet. Now let me show you structure, how it develops. So I'm sitting here with you, my jaw's on the floor, I have no idea. totally clueless. What was our retail price from yesterday? It was here. This was the fair price. If and the liquidity. And one more piece, you might like this, or maybe not. Sweep, I got liquidity. I'm under the opening swing low. It's a panic. It's going down, and watch. Sweep, sweep. Too high. Now, let's look over here. So what I have is running market, pullback, outside edge, 69. And an important location here. We have yesterday's low. Apparently, there's trouble. No trade. Liquidity. Remember, I'm see the sweep, I'm looking for the counter rotation. This is resistance. I bounce off it. I bounce off it. A very advanced trader could take a short here. Me, not necessarily. And I think I might be an advanced trader. Now I know I'm seeing structure. So now I know this is too high and I'm running. I come down again. Now, the only way I can trade this is what's called mean reversion. This means this kind of thing. Boom, bang, continue. So as the structure comes in, I'm looking. If I get these rotations, these are where my trades are going to show up. Let's see if we can see them. Sweep, counter rotation. Watch. Now, liquidity comes in here. Outside edge. 40. Sweep. Upside rotation. Liquidity comes in here. I'm getting sweeps. Outside edge. And it's still very hard, very fast, okay? Watch. Outside edge. I have structure now below me. This is a low volume node. I can sell out here, and now I have something to work with right here. And I have this. So I got this, and I got this. Now I'm going to throw a box around this thing. And here's what's important, guys. This is a structured trade. And if you can't deal with this, it's not important. This one trade. What's important is you understand when not to trade. So I know here I got resistance, and there's more. I got this. So I got this out here, and I have a low volume outside edge here. So I know this is my area, and there's my liquidity. I have a sweep. This is not material to me. I want to see a buy sweep. I'm only getting sell sweeps. They're not material. Watch. This is resistance. Support. Blow through. This is a trade I would take. I would get risk neutral. I get taken out. I'm just telling you. Now, where's my outside edge? It's out in here still. Let's watch. Now I got the sweep. This is material. So what do I know? This is now gone. It was resistance. I come back. I now have a sweep here. I'm still at my outside edge. The volatility is extremely high. So that's a bit of a problem, right? Break. This is support. Break. Break. This is another short if it's in your plan. This is very advanced stuff. It's really not a good idea. Okay? Not a good idea. So for me, if I'm taking these trades, it's just as hard for me as it is for you. Very hard to trade. Personally, it's better to sit out until you have structure. So there's no longs, obviously, and this is an outlier event. Yeah, I would say you don't trade this really, because I don't know how you manage risk in this for you. Let me see if I can find some structure for you here. LVN is out here. Liquidity comes in here. Let's just see the behavior. Yeah. I could tell you very, very comfortably that it would just have to really set up with a lot of structure. So for me, it's mean reversion. It's only outside in. It's only shorts. And I'd only be selling counter rotations to come back here. So the idea of this is outside in. And in this environment, it might be very smart just to wait and not trade it. You know, if it calms down, then there's less volatility. You can, this is something you have to determine for yourself. I can't tell you, I will trade this. I'll take stops in it because of volatility. And I have to either increase my risk, my range because of the volatility, or I can cut down my size to keep my risk fairly constant. All right. These are the hard part with the reversion trading is where's your outside? It's out here. It can be here. So you can get squeezed very easily. And the idea of any shorts is to come there because that's the mean. So it's outside. And, is this the low of the day? I have no idea. It's not my job. My job is to try to get an alignment. And that is outside.
He has sellers at 6,682.5.
I mean, they're 20-point rotations, guys. You can work in this, but you cannot be running your 3-point stop. You got to look at the average range, how it's exploded. And when you're getting in, your stop has to, so look at the kind of stop you got going here. 10-point stops, 8-point stops. That's outside your wheelhouse, then you don't have a trade because now the current condition of the market doesn't fit. I hope that makes some sense. Hope you're getting something out of this. It's just the nature of the beast today, guys. This is trading, and whatever happens, happens in here. Please give a like if you're getting something out of this. I don't control the market. What do we control? We control ourselves, hopefully, and our plan. So if you have a plan for this volatility and trying to trade this structure, outside edge, sweep, press. This is the mean. This is where this short would go. You'd be attempting to come right there to this high volume. This is called reversion trading. So it's an outside in trade. You still have to be looking at structure here. Liquidity, sweep. What do we know about the liquidity in the sweep? If I break below it, I can come back and check it. You see, I can take a short here and I'm going there. That's called a reversion trade. You should take a screenshot. So you could trade this, but let's look at this very specifically. I want to show this to you. So you could do it if you know it. So if you're trying to chase it around, you could take a lot of stops in this. But now if you're patient, this is what's important, the liquidity and the sweep. Then either we're going to break above it, hold it, go up, or what? Break below it, test it.
Size 300 19.0.
This is now microstructure. So I have a combination of elements here. The sweep, this, okay. I'm outside, and I know this is my retail price in this distribution. So I'm basically, reversion trading is just initially trying to come back here. So when I break under this and I test this, my micro high volume is there. So this is like a VPOC. So the buyers are here, the sellers are there. I break away. This is resistance. I test, I break away. I can be getting short in here, in here. My stop has to go here, and I'm trying to go there. That's the trade. And then whatever happens, happens, you know. There. So you're trying to get here. We'll see what it does. Not a trade recommendation. This is the reversion. So the idea of this trade is, you, in this volatility, you got to get risk neutral. If you can clear that right there, then you got lower. If you can't get below here, you got trouble. But this is your outside edge now. So we'll watch it. These are not trade recommendations. Let me move this out so we don't lose it. High volatility, eh, guys? First, the longs are counter rotations. They're not longs unless you want to be a counter trend trader in this environment, which is, of course, your business. Me, not so much.
EPS fired at 6,690.75.
Okay, let's watch the behavior now. I'm making some adjustments to Investor RT, which will export some levels in real time so we can see. It might be a long, doesn't matter to me. It could be, you know, this is all time frame specific. So, you know, one trader can be taking longs here and another trader might just take shorts, you know, on the counter rotations. So it's just trade plan and time frame specific. One second here. Let me try to get my brain in alignment. Very high volatility, guys. A lot of range here in these rotations. Liquidity. This is your outside edge. Trying to get over here, and it either will or won't. That's that. This is an okay short for me. And, you know, if it keeps going up here, it would be a scratch. If, you know, or the sellers that are here, if they come back in, then we're going to continue down. So I don't have any longs. I'm not saying, you know, it's not a trade recommendation. This could be the buy of the century. I don't work like that. I don't try to pick the low of anything. I try to stay in alignment with the dominant side. So when the dominant side is selling, I'm going to use counter rotations for continuation shorts. That's me. Other traders are going to trade counter trend. I have found that, well, doesn't matter what I've found. This is what I do. I'm not saying this is what you should do. Because there's an old saying, I know, you've probably heard this, the trend is your friend. What is the trend? Down. Do you want to join the buyers? Who are the buyers? Is it new longs or is it shorts that get squeezed and the stops come out and then those looking to sell take the other side of the squeezes? That's what I do. And again, I'm not saying there's not one way to trade, but I kind of think that if you take a deep breath and you calm yourself out and you're not in a video game, you ask yourself, which side is dominant, and do I want to join maybe just the guys who are short that are using our buy stops getting squeezed out? Do I want to use the squeezes into locations for continuation shorts down to locations? Let me make sure. What do I got going on here?
Yes, sellers at
80.
6,675.5.
So this is where I was trying to go, right? So the short
Yes, sellers at 6,000.
down to here. This is the same trade. Short down to there. Now you're hanging out. And then it's whatever. Trade management and maybe new low of the day. I don't know. Not my job. Sweep, potential counter rotation. Trade management. Is everybody tracking? Not saying this is a good idea. I couldn't tell you what is a good idea. Something is not percolating here. Hold on a second. So there's your sweep. This is your resistance. You have a scale. This was your next target right there. And then this is resistance. So if this is too low, it comes across here, that trade would be over. And you have to be okay with that because all we're doing is trying to trade rotations. I am seeing two-sided trade, and we can still squeeze from here. Fair amount of buying here, but it's two-sided. Very two-sided now, but this was some good buying here. There's a low volume zone up around 6708. So in this scenario, what you're trying to do is this too high? Because this is an outside edge to come here. This is called mean reversion, underlining the term mean. That's the mean in this. If I get outside of this, then I've got, this is my resistance. It's right there. So if I can stay under here, I can be doing this. If I push through here, then it's possible I can squeeze to there, to there. I already know that. So, one moment. So you can see how I can see where the resistance is. Something's not working right here, guys. Let me see if I can figure this out.
So, size 337.0. Trade the SC fight CMD and white sell 329.
Uh, 66, 57, 59. I have 59 as the current low. That's accurate. There they are. Okay. High volume node is here. That's the target from there for the reversion. This is the mean. Mean, underline, reversion. Target. This is the short. That's the target. Then it's, if we stay under here, we can come down to the other side. That's the trade. If the buyers, which are still, I still see buyers here. If the buyers continue in here, we're going to squeeze these guys out. And if we do, we're going to push further outside. It doesn't change for me to not get short. And that's not a recommendation. But then what I'm doing is, if I come outside of this right there, that high volume, this is where the high volume is where we had this consolidation and we rejected it, followed up by the liquidity. So if we come back up here, we need to watch this level and we need to watch the liquidity. Do they pull? Does it get dark here? And does liquidity come under it? So that's another piece. So this is the piece. That's the same. That's the trade. This is resistance. And if it stays under here, then under there. If it gets above here, then it's going to squeeze, and then I would stand aside. Just me waiting to evaluate how far up might we squeeze. So I have no longs, and I really want to stress, you could be taking longs. And when I say that is, just if you're going to take longs, let's you and I have a talk on the side, and we're going to talk about probabilities and edge. And we're going to discuss the difference between edge and gambling. And then you're going to tell me why you have an edge, and I'm going to accept it when you show me the numbers. And I'm going to maybe say, gee, that's a great idea. Let's do that. Or I'm going to say to you, why are you getting long when everybody is selling? Until it changes, you say. So we have to define change. And when it changes, we have to define the trades that are qualified in alignment with the current condition of the market. If the condition of the market changes, then we change. But until it changes, and it hasn't yet, and for it to change, and that doesn't mean it becomes long. It means then we squeeze the shorts, and we might only come further outside to squeeze out the current shorts for continuation shorts. So in other words, if we pushed outside, we might still be taking the shorts. That's all. So for me, this is the last short. That would be it. We had another one, I think, further outside somewhere, but this is the one now that's sort of, things have calmed out a little bit. So I don't know if that's anything that's material to you. This, you can learn this. It's a bit advanced because the conditions today are not our typical walk in the park, if you know what I mean. Are you guys with me? Is this useful? Is this helpful? You getting anything out of this? Because what are we really trading? The most important, basic, repetitive condition of the market. It's called mean reversion. No, Ben, I'm not waiting for liquidities that have resting liquidity. I'm trading my plan, which is mean reversion. In a running market, all I have is outside in trading. In the outside, before this showed up, is out here, the low volume area. So I'm trading this area to come back here. So when it comes outside, there's my liquidity. And all it did was come up to resistance. Then, and I can't tell you anything until I get the reaction. Then when I get the reaction, I can then look to take a short. This is where I'm taking my short, you know. And I also am not putting my stop there. If I take my short here, my stop is not there. It can't be there because of this. Because I can get picked. I have to be further outside. My risk goes up because of volatility. Even this is a short right here. Why? But this right here, this, so let's look. This says down. This says down because of the sweeps. This says up. Down. This says down. It goes up. This comes in, which means the sellers here are going to look to sell maybe here, and we don't know that. Chest, break low. So what do I know? sellers, microstructure, too high, break. Now, let me show you a little more. And these are not recommendations. Ben, this is not where anybody ought to be trading. Sellers in control, sweep, counter, rotation. Where's my resistance? It's there. There. All these are shorts, and you got to be able to accommodate this risk. Look, it's 5-6 point risk. So everything. So if you're averaging a 3-point stop in a, let's call it regularly, and now you're in a 6 point, you got to cut your size in half. So if you're trading, I don't know, but go down to micros. If you're trading the minis, or if you're trading 5 and 5 micros, go to 2 and 2. Something like that, Keep your risk constant. Cut your size. You got to keep your risk constant because you got to expand your stops. So this is a short. And where are we trying to go? South, I think. What do you think? And then it's trade management, right? So guys, I'd like to tell you this is just another walk in the park. This is a separate part of a plan. This is the what happened plan, the news plan. I always talk about trade plans, and trade plan is the market is always checking levels. The auction is how the market works. You're seeing how the market works. When you get an outlier event, it's changing everything. It's kind of like a new input comes in, and the market, remember, the function of the market is to figure out what's too high, what's too low, what's fair. When you get an outlier event, the market just throws its hands up and goes, I don't know. Now what's too low? We got to find it now. Well, we now know what's too high because we rejected it. Now where's too low? Don't know. So what do I do? Until it finds too low, I'm going to be selling it until we find too low. Do we know where it is? No. Is that the low of the day? Maybe. Do I know that? Nope. So I just keep selling it until it starts violating structure going the other way. So when somebody tells me I'm going to get long, I'm going to say, why? And then hopefully they can tell me. Or they're going to say, I just like to fade and pick bottoms. And I'm going to say, well, how's that working out for you over time? I don't know. I always say, I don't know. But I do know that I'm not going to be taking longs today even if you wrote me a check and say, hey, Tom, go at it. I'm going to be, no, that's okay. Keep your money in your pocket. Me, shorts. Hope you get something out of that. Good buying, Mohammed, is absorption. You notice if I say there's buying, it is showing me the counter rotation developing, not any longs. When I see buying, I'm stalking a short, which is here. I'm not taking any longs. I wouldn't take a long with your dollars. Even if I find the low of the day, which I never have, so I don't try. I'm just taking the shorts because that's the trend. So what I'm saying is I see the buying. I'm anticipating a squeeze and a counter rotation for continuation shorts. Hope that's clear. Mohammed, I hope that clarifies. How we doing? How we doing in the Trader Lab, in Discord, and how you guys doing in YouTube? Please give a like. I hope you're getting something out of this. This is trading. When you like it, it isn't anything else. It's just what it is. So this is the last short. There was another one further up, but this one, very doable. And this is called mean reversion. That's why mean reversion is the primary trade traders ought to learn. Where was the other one? I don't remember now. There was another one in here. Anyway, does that work for you guys? It's a 30 point, well, let me see. Yeah, it's a 30-point trade. How many of those do you need? Can you be patient and just wait for the trades? That's all I can tell you. So what did we do here? We identified a location. We looked at the profile to see where the outside edge was, which was here. We know that high volume is here, which was rejected. We know this is too high up here. There's high volume. Let me just show you a couple little pieces. Things you can ponder, and if you're in Trader Lab, you'll understand what this stuff is. Buyers are there, sellers are there, absorption is there, high volume is here. When I break below this, this now becomes resistance. Stops are there. High volume is here, and you could see it there. Liquidity is here. That sets up a short. I come back here. Liquidity is here. New liquidity comes in. This is my resistance is up here. It comes from there. So I got this for selling. This is backup, and then whatever happens. Liquidity trigger. As long as I'm under here, which came from here, I'm okay. I can be selling this, I can sell that, I can sell that, all these are, this is a structured trade. And then you're just trying to get here to get risk neutral, and then you're holding. And then whatever it does is, part of the thrill. Is this a trade that would work for you? And here's the question. This is called mean reversion. This is the trade I always suggest to developing traders come to Trader Lab. I call this the bread and butter trade because this is every day. And as long as you can identify, there's two ways to use this. You can use it for continuation with a trend, which is what this is. You can use it for trade management. Let's say we were getting long there's no longs, but let's just say there was a long. If I come up to the outside edge, which is where I'd be taking a short in this context, I can just target it. But since I'm only taking shorts, I'm using these rotations. Amateur traders are going to be getting long. They're picking the bottom all the way down. And that's the path to a new career. Anybody who understands the business and has a trade plan with edge would not be taking longs. A long might be a trade management opportunity if that's defined in your plan. But where do you think the opportunity is? Isn't it to get short? How do you get short? You need a counter rotation. Where do you get short? Outside. What is the behavior? This is shopping. I'm not paying that. Fair. And then where's unfair? I don't know. We're trying to figure out. So keep going until we figure it out. And I couldn't tell you where that is because it's not my job to pick the low of the day. My job is to take the trades that I have an edge, manage the trades, and accept the random outcome. I'm not going to get the high of anything. I'm not going to pick the low of anything. Clueless, but I'm not ignorant. Buy sweep, lower. Sell sweep, failure, lower. Next layer of liquidity, high volume, and it's 66.50. It's a strike. For me, right here, I'm going to be, as they say, have the eyes peeled. I'm getting the sell sweeps right here. This is very important, the behavior. This trade can be done here. Does it matter to you? Watch this. So the way I operate, I look at this. I'm right here. If I was in this trade, and this is not a recommendation, be out of it. Wouldn't even think about it. So what was this trade worth? If you're in Trader Lab and if you're doing your thing, let's just assume, whatever, 90, here, shorts actually here, or here, or here, and then you're going down in here. And then it's just trade management. Or you're out, whatever. Does it matter? That's like a 40-point trade. I don't know. I work with that. This is the Trader Lab. I'm not saying this is good for you, and I'm not saying any of these trades are anything any of you guys ought to be taking. I'm just sharing the trades I would take based on my understanding of market mechanics and my trade plan. And I have to tell you something else about it. If I take no trades in this environment because it doesn't fit my plan, I'm perfectly okay with it. FOMO will take you out of the business. Picking the low of the day, amateur night. Leave that to the amateurs. Professional traders know where to trade, when to trade, and they also understand if risk goes outside their parameters, then the trades are not qualified. So for me, if I get an outsized volatility, I'll cut my size because I want my risk to stay pretty constant. So I'll have less size, but I'll have more range. So the risk reward, I'm still going to come out, but I'm not increasing my risk. I'm increasing my range because that's what the market is offering. Does that make sense? Mark, this is the recent mean reversion. There's another one or two. The longs this morning were reversion longs. You can review the stream. In fact, I suggest all you guys, if this is of interest to you, there's not necessarily a lot of trades, because the trades have to fit. So if the market is going crazy over events and things and there's no trade, their job's not to respond to FOMO. Your job's to be sure you're still in the business tomorrow. There's going to be thousands of trades in a career. What's the hurry to gamble? So I just wait. I take trades that fit. This is my last trade that I would be in short right here. You saw it live. Forward this to your friends if you think they'd be interested in this. If you take no trades for the rest of the day, you're going to be here tomorrow. If you get FOMO and you say, I could have had this, I could have had that, I should have done this, I should have done that, you're already on your way out the door. The only reason I'm saying it to you is I've seen it over and over and over. There's a big difference between professional trader and an amateur and a retail trader who thinks they're playing a video game. They don't stay in the business. That's why the failure rate is so high. You have to understand what they do, why they do it, and don't do it. And you have to train yourself to recognize when you get stimulated emotionally, when you're losing control. A lot of that is chemical. It has nothing to do with your intention. We're still going down. Don't forget, this is our area now, right? 50. And that's a level. So we have some alignment here. And this is, for me, this is just where this trade would be going. And then it's just trade management. Outside edge. This is a mean. This is reversion. Out here to there is mean reversion. Out there to there is mean reversion. They're all the same. Reversion happens in multiple time frames. This is the mean, outside edge. I'm not paying that. Yeah, but it's retail. If I come out, I go down. If this is too high, I continue. If I get short covering here, I counter rotate. That's what I know. I'm not going to tell you what it will do because nobody knows. So it's not my job to predict. My job is to manage my trade, look at levels, and have a plan. Now, what's going to happen here? Interesting, isn't it? So would you be okay with the short? This is the last short, mean reversion. It's a continuation short. The only way I have in my trade plan that I've shared with you in the structured trades and available to all of you at no cost in Trader Lab is outside in trading mean reversion. These are called continuation trades. So the market counter rotates, I'm getting short. And this is where I'm going on this trade. It's not a recommendation. Please give a thumb up, give a like, review the stream if you got something out of it today. It's an outlier event, so this is not your walk in the park, as they say. But you can learn this. Don't forget to like, Forward this to your buddies, copy that link, send it over to them. Review this stream, and use the link in the bottom of YouTube if you want to visit the Trader Lab community. It's a group of like-minded traders who've come together to leverage their collective experience. There's no cost for it. Doesn't matter how long you've been trading or what your methodology is. What does matter, if you want to build a business in trading, understand the business, create a plan that has an edge, and leave the gambling to somebody else. Target, not a recommendation. And if we get below here, there's more. Is this something that might be helpful? What do you think? Don't forget to give the like. The only way that you can support the stream, since there's no cost for this. And if you want to visit Trader Lab, use that link in the bottom of YouTube, but don't forget the like on the way out. This trade is over. Not a recommendation. Thanks again, guys. Have a great weekend. Look forward to seeing you next week.